Good afternoon, everybody. This is Mark, and I'm here doing the afternoon recap. Scott will be back tomorrow. So, we were talking about Thursday, Friday, that any pullback is viable. The key to trading, the key to obviously any type of trend is to stay on the right side. We've been in an uptrend since the year began, and every pullback has been viable. And we've been using either the 10-day or the 21-day as opportunities to get more involved and to get a little heavier with your long positions. Understanding that you can really rent the short side at different periods in time. Thursday, you obviously could have rented the short side. Into Friday morning, you could have rented the short side, but it became a viable opportunity. And you saw it, and I'll break down the time frame just a little bit more for us to see. Around 10:30 on Friday, you saw a little bit of a bottoming action in the spiders. You can see it in the IWMs, and you can see it in the Qs. And this action, obviously, you had some follow through to the end of the day on Friday. Bernanke was speaking today. You had a gap up, and it was basically a gap and go for the most part. Obviously, not a lot for us to do from an intraday point of view. It was a little bit trickier, but the key is to remember which way we're at and what is the trend telling us. And don't be afraid the next time we do get that downtick and we do get the pullback to be involved and to get involved on the downside. That's why we're here. It's to help guide you in that direction. So today the standouts, we could start with our favorite, which is Apple. It's been digesting for a few days, and I'll put up a 13-minute chart right now. You can see the tight action over the last 2 or 3 days. Really, I know guys were shorting it, around 600, 605, down to 595. Very hard money. Then all of a sudden at 595, going to around 2 o'clock today, it woke up, and you could just see where the money's going. You have 3 days, it moves down, $6 over 3 days, and then in 20 minutes, half an hour, it goes up, $10. That's telling me that it's ready to, it just consolidated over the last few days, and you can see the daily chart. It looks like to me it's ready to go a little bit higher. Understand it had a big parabolic move. I thought it was going to rest and digest a little further. To me, it's telling me it's not going to rest. So keep it on the radar certainly tomorrow morning. Another stock we've been highlighting since 185. I've probably been in it since the beginning of the year, and obviously took a lot off at 195, thinking again you were going to get more of a rest. Rested for 3-4 days. Penetrated its 200-day moving average today. To me, it looks like 210 possibly is some resistance. Let's go to the weekly chart. It really looks like a very good looking constructive pattern, which probably will grind higher into earnings. So just keep that on the radar certainly. And another one that we've been highlighting, Baidu. Not as fast as the others, but it looks like it had some announcement with Apple, and up and away. The buy trigger was around 138, 140. It's now at 150. Looks very good. And this is one thing to note. It's not at the yearly high where a lot of these other stocks are. So it's something that can actually have some, like Amazon, has some more room to run accordingly. Best in breed. I keep saying every time we pull back, try to find opportunities to get into best in breed. Best in breed, we've been naming them. They're not a mystery at this point in time. MA, best in breed. Pull back to the 21-day on Friday. Had a decent move on Friday and obviously gapped up this morning. New highs. Price line. At this point, it's going a little bit. It's already gone parabolic, but it was hugging its 10-day moving average. Or 8-day moving average, and at this point it's starting to get a little bit farther away from it. It's now going to probably get to 750, but at the same time, too rich for me to buy. I'll try to find some shorter time frames to try to execute on, but at the same time, I'm not going to be chasing this idea, not at this point in time, but it does seem to be going higher. CMG I've been talking about since 400, hugging its 10-day. Friday was a gap down. Obviously today, it's still shockingly staying within its trend. I thought it was going to get a little bit outside of its rising channel, which seems like it's working itself to the upside. But at the same time, it's still pretty intact, and you can see it by the daily chart that I'm showing. At some point, you're going to have those extended up arrows to me, that will probably be an opportunity to sell. We're not quite there yet. Another stock, same type of pattern, ISRG. Google, seemed like 650 was a little resistance. It seems like the next move is 660. That also will probably make a new all-time high at some point in time. Put up the weekly chart. It's not that much, it's not that far away. It's 670. I know the chase is on whether Apple and Apple's going to catch Google in price. Obviously, market value is much different, but it seems like Google's up and away. The banks grinding higher. Nothing exciting here. They're just very very what's the word I'm looking for? Not getting too far away from the 10-day, 20-day moving average. They're just grinding higher. They look good. They can be bought on pullbacks. I'm not going to be chasing them on any sort of rally. I don't think they're going to run away from us at this point in time. I think the key is next pullback, you get a little bit heavier and you get a little bit more involved. Gold, it's funny. I circled gold last night when I was looking at my charts, saying Friday's action into or Thursday's action into Friday gave a little bit of signal that you had some bottoming action on silver and gold, and pre-market you had a little bit of a move, a big move, and that really was the move that needs a little bit more digestion. But it looks like the bottom's in temporarily. Looks like both these commodities can go higher. So for the GLD, next resistance level, it's only been gapping up for us. Looks like around 160. Looks around 167, 168, and silver, looking around 130, like 33.50 to 34. Next resistance level. I don't think it's going to move so fast, but it's something we got to keep on the radar accordingly. Other sectors, oil, I'm still not even concentrating on. I don't really care that much about it. It's certainly on my radar, but I'm not really trading it that much. Other ideas, I think home builders had a nice pullback. Possibly they will have another run at some point in time. We got to understand a few ideas. The market is we're getting into earnings season. March, normally end of quarter, you're getting a little bit of more hedge funds, more fund managers trying to obviously show their position, show that they were long and heavily invested in the 12% move that we've had year to date. But at the same token, we will have to wait and see what happens when April comes around, when earnings come, and you have to see what stocks really shine and rise to the top. And I think that's going to be the test, and I think that's going to be key for us to really start to telltale. I don't think you're going to get the next 3 months. I don't think the entire market goes higher. I think at some point you're going to get some digestion. But I think the best in breed will continue to outshine the market averages, and it's our job and it's your job really to start identifying them. And if you do that, you're going to be in good shape. And at some point, you have some hedges on just in case for some downward action. That at some point is healthy for a market to go higher. Retail is still not in. The volume was extremely light. It keeps being mentioned on CNBC. They are always late to the party. But that is key. I still don't believe retail is going to get in until we get to 1380 on the on the indexes. That would be at probably 1470, 1480, the S&Ps or even higher. I don't believe we're going to get to that point. Until we get to that point, I don't believe retail's still going to get in. I think they're still standing on the sidelines. They still can't believe this rally, and they're still waiting for the pullback, which makes me more bullish than ever because, again, they will get in at the wrong time, which is what normally happens. Then they get 6 to 8 months to maybe a year of rallying before, obviously a rug pull happens. In between there's obviously lots of ebbs and flows. But for the meantime, still staying long. The trend is your friend. We obviously closed on our highs. We closed strong. And overall, I think you just have to look at the best in breed on pullbacks. It's an opportunity to get involved. And we do keep going from sector to sector, from a day-to-day point of view, from a shorter time frame point of view on how to really get involved in this tape. It has been difficult from trying to make money and trying to find your a bunch of trades intraday. But I've been saying in my morning meeting, every single day, you're getting 1 or 2 opportunities that slap you in the face, that are the aha trades, that make a whole lot of sense, that you can get paid on. The key for a trader is to wait for that opportunity, find that stock, or hopefully that stock falls in your lap, or that idea falls in your lap, and take advantage of it. It's happening every single day. It's just our job really to be a little bit more patient, build up a little bit of endurance, so you can just sit and watch and wait for that idea to come to fruition, versus trying to be in a bunch of B trades that, quite frankly, aren't getting you anywhere and are spinning your wheels, and at the same time getting you frustrated, because that's what the tape's trying to do. And you as a trader, and obviously the more experienced guys are already seeing it and doing it, you as traders have to really take advantage and take a step back and wait for that 1 or 2 opportunity to really be involved. So overall, guys, I've been saying it, trend is your friend. We're staying at that level. You know, I used to look at the VIX as an indicator, VXX or the VIX, VIX. VXX at this point, as TVIX, it's basically irrelevant indicator. No longer am I even looking at it, more from a trading vehicle, from the short side, because it seems like it's priced to zero, priced is going to zero, just as the TVIX is. So where it was relevant, for a little bit, it's not as relevant anymore. And that's what happens with these ETFs, and that's what happens as the market starts to change and adjust. You just got to adjust with it. I hope you had a good day today. Enjoy the weather outside, a little chilly, but nice outside, and I will be back here tomorrow.